Hey guys, welcome back to We Talk Money, the show that's all about answering your most pressing money questions. We also take a look at the markets and give you actionable insights into investing. So let's go ahead and jump right in. I'm joined by Nikki, certified financial planner, and Travis, hedge fund investor pro. We are just a few days out from the Bitcoin halving. Lots of activity over the past week. We've had an awesome breakout trade over the past couple of weeks on this. And why don't we just jump into it? So the Bitcoin halving, we'll talk a little bit about what that is. And then we'll jump into the markets, talk about earnings. I mean, there's just so much to really pack in today. So we've got about 3 days left until the halving, where the block rewards get cut in half. And this is really the third time that this has happened in Bitcoin's history. And the prior 2 times that this happened, Bitcoin has gone on a major bull trend after that. And so the news that kind of popped yesterday was Paul Tudor Jones buys Bitcoin as a hedge against inflation. Trav, I'll kick this to you. Why the hell should anybody care who PTJ is? What's his history, and why did the market have such a strong reaction? You can see yesterday we had a really big breakout on that news, and we're currently testing that 10K zone. But why is this so important? Why do people care what he has to say?
Yeah, well, Paul Tudor Jones, first of all, is a legend in the hedge fund world. You know, this was a guy who was one of the icons of the hedge fund industry, built up his fund starting in the 80s and 90s, built it into a multi-billion-dollar macro hedge fund, made a ton of money. They made a ton of great calls. So he's very, very well respected, and a lot of people follow his moves. He's kind of more retired himself, I think, over the last 10 years or so, but he'll come out of retirement and make these big trades sometimes, and you want to watch what he's doing when he does that. I mean, this is the guy who called the 1987 stock market crash before it happened. If you've ever seen that YouTube video, it's pretty interesting. He walks through some of his thesis. It's mostly like technical based, but it's a really cool video if you go check it out on YouTube. But the second part of this, obviously, it's not just that it's PTJ. It's also that this is a confirmation that some of the bigger boys and the bigger players with large amounts of capital are actually entering this market, like we've talked about. You know, I think early this year, we spent some time talking on one of these episodes about the benefits of Bitcoin being a scarce asset, but also the correlation benefits to other types of portfolios. And we made the case that we thought institutional investors would increasingly look to invest. And this is confirmation.
Yeah, absolutely.
And what's interesting about this too is a lot of actual advisors in the space that are managing money for individuals. A lot of people are frustrated, clients are frustrated with their advisors because their advisors aren't adopting Bitcoin. They're not accepting it. They won't even hear them out when they want to have some of it in their portfolio. So this is a struggle that's maybe going to start to shift, and advisors may start to kind of embrace it a little more and listen to their clients a little more about it, especially millennial clients, right? By seeing guys like this get into the space.
Yeah, absolutely. And, you know, we made a case, I think it was about a month ago, where we said, this is Bitcoin's time to shine, right? Like, we've got kind of the perfect storm where we've got a global crisis, we've got the Fed printing trillions, and we've got the halving. So you've got this kind of culmination of this perfect storm where it's like, if Bitcoin's going to do well, these are the conditions that it needs to do well under.
Yes.
Right. Yeah. So let's just take a look at the chart real quick. So talking about the recent breakout trades. So obviously, you know, for people that have been paying attention to this, in March, when basically all markets took a dump at the same time, Bitcoin crashed by about 50% in the span of less than 48 hours. And for you guys that are watching this, either on YouTube or listening to the podcast, I'll give you a very simple example of what I call a high probability trade, which is a trade that has a statistical edge. And you can very easily backtest this for yourself just by going back and looking at the charts and running the data. If you look at every moment in history where Bitcoin has crashed by 50% or more in less than 3 days, the counter force moves, meaning the bounces on those moves, are very big on a percentage basis, and they're very reliable. Now, just like the disclaimer says, past performance doesn't predict future performance. So that may not continue to be true, but Bitcoin has shown us time and time again that every time it panics, and when I say it, I mean people that hold Bitcoin on exchanges. This is a very volatile, very emotional market. people love to rush for the exit at the same time, right? And so every time it does this, the counterforce moves are just incredible. And, look, if we take a look at the chart for you guys watching the video, you know that buying on a chart that looks like this is very, very scary, right? You can see the momentum and the market sentiment on Twitter and stuff where people are just all freaking out, and that fear just kind of spreads and causes people to sell these lows. But that's why we like to step in, and we bought the dip through here. And most recently, we had a really nice breakout trade in the 7K zone. And here we are testing the 10K area just a few days before halving. And this is like the fourth major time that we've actually tested 10K in Bitcoin's history.
It's funny how the hardest trades to make are usually the most profitable over time. Like, nobody likes buying red bloody candles. It kind of gives you a little feeling in your stomach.
Yeah.
But usually when you have a plan and, you back test and you look at the data, those are essentially the best times to buy, and you could see those huge capitulations that become pretty profitable. So it's funny how that works on the psychological side,
Yeah, we talk about that in the chat room in the community a lot, is how the best buys are when it feels the most awkward.
Yes.
Even
in the stock market, when the stock market was panicking, when we were, buying stocks and
we had some people in the community that were asking us why we weren't waiting, because
they thought we were nuts at times.
Yeah. And there were others who followed us, and it's worked out really, really well. But I don't necessarily fault them for kind of questioning us at that moment in the middle of March, when we were like, look, we're taking some positions here.
Yeah.
And they were like, well, why don't you wait until things are clear? Or why don't you wait till the virus numbers get better? Well, it will be too late at that point.
Yeah.
Usually is. I mean, this would have been the case. Same thing with the stock market.
Yep.
The bounces are strong.
Yeah. I mean, that, and you almost have to train yourself to become really excited when everybody else is freaking out. And it's not natural. It's not easy.
Oh, yeah.
It comes with practice.
And not
experience.
Sorry, I didn't mean to cut you off.
You're fine.
It doesn't work on every single asset or every single 40% drop, right? You're talking specifically about Bitcoin's history. In the stock market, there are companies that go bankrupt. So it doesn't mean you just,
buy everything that crashes.
Candles
exactly. So you have to know the fundamentals of what's going on in some of these assets, obviously.
So I just look at the yearly lows, and then obviously the growth has just been incredible as far as new daily active users and stuff like that you can measure to actually look at the spread of this global market. So pretty exciting stuff. Good to see big money coming in. Obviously PTJ stepping in and making a public statement. That's pretty huge. Let's move on, guys. Let's talk a little bit about the macro stuff. So we've had some pretty scary unemployment numbers coming out. There's been a ton of earnings. I'll let you guys take the run on this and just kind of guide us through what we're seeing here.
Basically, the numbers for unemployment and the non-farm payrolls reports were really bad, but not as bad as anticipated or as estimated. And the market rallied, and everybody's angry. That's essentially the breakdown of what has happened.
So what does that mean? Not as bad, but it's still bad.
Well, the estimates were higher, I think, for the unemployment rate. I mean, I think when even we were talking about it a month ago or so, we were thinking 20, 25%. Plus, potentially, right?
Yeah.
So I think the market just had really, they had high expectations that unemployment was going to be very, very high.
Yeah.
So the fact that the numbers came in below estimates, the market essentially is saying, okay, well,
trying to shake it off.
Maybe we'll be okay, Yeah. So, I mean, it doesn't make a lot of sense to many people.
Right.
Yeah.
But
I mean, there is a question here. We are still seeing, pretty high weekly additions to the initial unemployment claims. So this number will rise probably in the next month or two. We could get close to 20 or, potentially even a little higher than 20% unemployment rate overall at the peak.
Yeah.
Now, when we look at some of the data underneath it, a large part of the unemployment claims is in the service sector. So it's the jobs you would expect, right? The restaurant workers, the retail workers, the
travel
hotel workers. Yeah. So a lot of those hopefully will come back as those sectors recover. So we could see this rate come down hopefully pretty quickly. But I do think it'll remain elevated above the levels that we were at last year for a while.
Oh, yeah.
And that's really where the market, I think, is going to have trouble going into like Q2, Q3. I think it's going to have to digest what, really the speed of recovery really looks like and how long it's going to take to get back to, mid-single digit unemployment rate. If it stays persistently high, then the market's going to have trouble, I think, digesting that later on in the year.
So that's interesting, thinking about, service workers and travel and all that stuff. Hopefully that capitulates pretty quickly. Something that's interesting that our buddy Carter Thomas was showing us the other day is layoffs in the tech sector. So there's a lot of startups and a lot of private tech companies that have been laying off a lot of people. If we take a look at this chart, you can see Uber has laid off 3,000 or 4,000 people, Groupon, Airbnb, Toast, Yelp.
Yeah,
to be expected, though. I mean, look at the industries, right? I mean, travel, food, consumer,
true,
retail, fitness. I mean, obviously, these types of companies are going to have to lay off people.
Yeah, but your point is a good one in that we are seeing some incremental layoffs in the knowledge worker sector and in some of these higher paying areas. And that could be a concern if that intensifies.
Yeah,
because those are the high-paying jobs that you would expect to, have a pretty big impact on consumer spending if that intensifies.
Yeah, and so that's kind of an interesting segue into talking more about tech and early stage startup investing and capital. We've been talking about this, that there's a lot of dry powder on the sidelines. A lot of people in real estate and tech are just still kind of going, okay, is this a good buying opportunity? And I think a good example of that is in the VC space. So Andreessen Horowitz just announced, I think a week or two ago, they're raising another $500 million fund for the crypto niche. So I don't think we're going to see fundraising in private companies and startups just dry up. What do you guys think?
Doesn't look that way right now, that's for sure. So I think that's probably another thing that's helping support the market a little bit is this idea, that the once things start to recover, a lot of this comes back relatively quickly.
Yeah. So we've been, let's go ahead and segue to the public markets now, talk about, performance of stocks and gold and Bitcoin. And, I think it was yesterday I tweeted this, or I just showed the year-to-date performance of a couple of different assets. And my intention with this was to show that even when stocks are down, there are now, in my opinion, more options than ever to hedge your long equities portfolio, right? There are millions of people in the US and really around the globe that own stocks and traditional investments like bonds in their retirement accounts. And, a lot of people looking at this going, shit, what do I do? I'm scared. Do I sell? Do I, trying to time the market is hard. And over the past few weeks, we've been talking about the idea of hedging. And with this, you can see, there are markets that have done exceptionally well, at least year to date so far, right? Like Tezos is an altcoin. It's up nearly a double so far in the year. Bitcoin's up about 35%. Gold up about 10 to 15%. And even the NASDAQ, you can see kind of the bifurcation here where tech stocks in the NASDAQ are up, 4 or 5%, where the S&P with traditional larger cap stocks are still down 10%.
Yeah.
Yeah, it's interesting to see that correlation that Travis and I have been talking about with Bitcoin and the traditional equities markets. It's holding true. Bitcoin is essentially showing a negative correlation right now with equities. So that's actually pretty cool to see hold up in this environment.
Yeah, I think last few days they've both been positively correlated, but when we look over
a long period of time,
and it's kind of been, waving between being positively or being negatively correlated and having no correlation, but there's still more to be seen. But it's interesting to see it work like this now.
Yeah, definitely. And that's the thing. Instead of panic selling the lows, it's you can diversify. And looking at my portfolio, it's been kind of nice to see oh, you know what, gold and crypto and my futures hedges have actually been making up for any losses that I've had in the stock market. Yeah. So.
Yeah, it's interesting too. So you pointed out the differentiation in some of the indices, like the NASDAQ 100 versus the S&P. But when you look at individual stocks, it gets even more of a wide range. We have stocks that are multi-baggers already from our March buys, which is crazy.
Any examples you want to talk about?
Wayfair is a great example. It was one I actually got out of the other day, a little bit
Oh my
early.
God, look at this thing.
But yeah.
From $20 to 190.
Yeah, so my entries on this were at 45 and I think 35.
Oh, wow.
We alerted it in the community, and the stock has just been an absolute monster. It's now above its high, its highs from last year. So they are obviously benefiting from a shift to e-commerce in their area, in their specialty area, which is furniture and home furnishings. But the speed at which it recovered was unbelievable.
It did have a high short interest too. I believe it was pretty high.
Yeah.
So that probably helped.
Yeah, added fuel to the fire.
Yeah. And there's a number of other ones.
Square's up almost 100% from our buys.
Yeah. And that's a stock that is seeing some actual fundamental deterioration in its business, because their SMB volumes, their payment volumes, I think were down about 30% in March and April, they said.
Yeah, I think it was 39%.
Yeah.
In March.
But they are seeing some stabilization, but that's a pretty steep decline, and the stock is kind of shaking that off.
It was interesting going into the earnings call on this one, because we all were thinking, okay, they're very exposed to small business. Small business is not doing well right now. Like, we're for sure going to see just a terrible situation with the stock. And sure enough, not a terrible thing, but we thought we did not think we'd see it pop to this degree, right?
Yeah.
We were buying for long term, but turns out the damn stock takes off.
Well, they've got exposure in the crypto space as well.
The
through
crypto
Cash
space
App.
was a bright spot.
I can't remember that, but the numbers were very impressive with how much Bitcoin they were actually buying through their app.
Right, and they're seeing a very large growth. They're seeing very large growth with their Cash App. Yeah. That's just becoming, that blew up with the stimulus checks and them working with basically allowing people to get their stimulus check through the Cash App and kind of circumvent the whole bank, having to have a bank account to begin with.
I love it. So does that mean we're bearish on banks now?
Interesting.
Everyone else seems to be bearish on banks at the moment. Bank stocks are not moving.
Well, that's a huge problem. A lot of people don't have access to banking, believe it or not. So yeah, for most individuals, there's a large percent of the lower income individuals that are contributing to the overdraft fees. So a lot of banks actually eventually they'll shut their accounts down, and because they're constantly, overdrafting, and eventually they have to shut them down. So a lot of individuals don't have access to banking. So the Cash App, by giving you a routing number and being able to do an ACH transfer, it really opens the door for a lot of people.
Yeah, I love it. Yeah, and that's, Bitcoin's whole value prop is like there are billions of people that don't have access to these basic financial services, and banks are kind of a slow pain in the ass part of the financial system. I mean, they're rent seeking. They take a ton of money out of the hands of people that really need it with, like you said, overdraft fees and things like that. Mm-hmm. So I think anything that can contribute to taking power away from the Wells Fargos of the world I'm a fan of. So
yeah. This is a great example, though, just quickly here on Square, of looking out, for the longer term. Yes, we actually did get a pretty good short-term result. I like you, expected it to take longer for the stock to recover. But, this was a business that we love the long-term strategies, the growth levers that they have. We were able to buy it at, a third of the value that it had traded in early 2020 during the crisis in March. And we picked up a pretty significant stake. And then, it's recovered very, very quickly. But we were doing that knowing that the next quarter's results and probably the next several quarters' results aren't going to look great.
Yeah.
But
you're looking further out into the future.
Yeah. I mean, look at the quality of the business you're able to buy here, and that was really what we were thinking. Is like, hey, we know it's probably not going to be great in the next quarter or two, but we may not see these prices again, and we want to own at these prices.
He explained it way better than I did.
No. I mean, I think that's such a good lesson, though, because there are so many people that are focused on the here and now, which makes sense, right? From the humanity aspect and looking at the coronavirus numbers, it's like, let's get past this. Mm-hmm. But that's what the markets are doing, is they're looking into the future. And like the people that subscribe to the world is going to hell in a handbasket camp, that's fun for some people to like talk about and write newsletters about. But the reality is that I'm bullish on humanity. Mm-hmm. I think that there are going to be companies that when this is behind us that are going to do extremely well. And there's companies that are actually crushing it in this time despite everything that's going on.
Yeah.
Well, as Warren Buffett said, don't bet against America.
And we should point out too, we're not like permables who are like buy at any price. I actually have some index hedges on, like we've talked about.
Yeah.
I think the market may be ahead of itself a little bit in some of these overbought tech names. So I am being somewhat cautious, but I'm kind of, maybe it's cautiously optimistic is the way to put it.
There you go.
Especially
That's
when
good.
we're looking out longer term.
Yeah. I mean, same thing, like, just even looking at the charts on the indices right now. So, you can see kind of the difference here in like, in the top left, we've got the NASDAQ, which is, just a few points off of all-time highs, which is crazy.
Yeah,
and then you've
wild.
got the Russell 2000 that's really still struggling here because it's a lot of smaller companies. And then the S&P is kind of right here in the middle. I've actually been considering, so I've got my futures, my managed futures accounts, which have actually been performing pretty well this year. But I've also been considering looking at this zone as a pullback area to maybe even further do a direct hedge against my long portfolio, because the thing with managed futures accounts is they're not a direct short hedge, right? They're long short, they're in agriculture, currencies, commodities, in indices. So like placing a direct short hedge against your long portfolio can offer even more protection in the event that we do get another leg down.
Yeah.
And I think, I've been kind of planning for this type of scenario if it does happen. I think it really depends on what happens this summer with the coronavirus numbers, right? Like a lot of states and cities are starting to open up, which I think is good. We got to get the economy back. But what happens if the numbers spike again? That could actually give us another really scary second leg down.
Yeah.
The market isn't necessarily pricing in here, I don't think, a second lockdown, a major second wave that's going to basically cause the economy to stop again or slow down significantly.
And that second stop, if it's severe enough, would create a serious incremental liquidity problems for certain companies. Obviously, the airlines, some of the ones that are most exposed, that have high fixed costs, like that becomes a real problem.
They're barely hanging on with the expectation that there isn't going to be a second wave.
Yeah.
Or if there is, it'll be a lot smaller and more manageable.
Yeah.
Well, fingers crossed for that stuff. So, cool. So we talked about that a little bit, talked about the Bitcoin halving, talked about hedges. You guys want to get into some Q&A?
Let's do it.
All right. First question is from Vito. How long do you think Facebook and Google are going to remain growth stocks? And how do you define a growth stock? Let's throw that in for anybody that doesn't know that.
Go ahead, Trav.
I think there's a lot of different ways to define it. I mean, typically a growth stock is a company whose fundamentals are actually growing. So revenue, earnings continue to grow at a high rate. And some people actually classify a growth stock as just a stock that's seeing like share price growth. So I like to differentiate those two. So if the question is, will Facebook and Google remain like growth companies, like in terms of their revenue and earnings growth, I think they still have a long runway for growth. Both were still growing before the coronavirus crisis, still growing above 20% year over year. They have great assets like, Google's got YouTube, and there's the potential with autonomous cars, and they've got other assets that could provide growth over time. Facebook, of course, has things like VR and Oculus. They've got
now Zoom. They're trying to compete with Zoom now.
Yeah, they've got that big play that they're doing in India. They've got other things that they're still rolling out with some of their social media properties like WhatsApp and Instagram. So I think both companies can continue to grow for a long while. They're well managed. I don't know if the share price growth will necessarily follow, but they are pretty quality businesses. So I think if you look out longer term, it's probably pretty high probability.
Yeah. Tech is a steamroller right now. Right? Yeah. Like it's, obviously we feel for like restaurants and brick and mortar businesses, it's kind of hard to see a reason why this whole tech movement is going to even slow down a little bit.
And especially these companies specifically, I feel like they're always going to be on the cutting edge of technology and innovating and putting out new products and figuring out a way to stay relevant and keep up.
Yeah.
So that could fuel the growth going forward.
Yeah, they have the cash and the capital and strong balance sheets, so they can continue to invest.
Awesome. Next question. Italo asks, when talking about assets, you typically pull up the futures charts, like on gold, stocks, and oil. Are futures charts, are they better for making predictions? So basically, why, whenever we pull up a market, are we looking at futures charts, I guess, instead of spot markets or ETFs. I've got an answer on the Bitcoin side, but what do you guys think?
Yeah, I think, well, it depends on the market too. Like crude oil pretty much only trades through futures. There really isn't, technically the spot market for crude is like the front month futures contract. So, most of the volume in crude, for instance, is happening in the futures. So that's where you'd want to look. With stocks, obviously you could look at the underlying index, but we sometimes pull up the futures charts because they trade a lot more hours during the week. So they'll trade at night, they'll trade, on Sunday. So there's a lot more real-time price action in the index futures.
Yeah. And then for like commodities like Bitcoin and I guess even some Forex markets like currency pairs, where there's multiple exchanges or they trade in multiple places, it's nice to have a single data feed of like a single price. So for example, like on the CME, Bitcoin futures, they have what's called their Bitcoin reference rate. So this is where they actually take like an average of pricing data from some of the top exchanges like Bitstamp, Coinbase, Gemini, Itbit, Kraken, right? So they're trying to find like, what is Bitcoin's true price? Because if Coinbase is at $10,000 and Bitfinex is at $10,010, what's the real price, right?
Yeah.
And it kind of gives more clarity there. Same thing with like Forex markets. You'll have, the Aussie dollar, versus whatever trading on different exchanges. What's nice in the US is also through the futures markets, you can look at Forex futures and try to get an even more stable or centralized price.
It's just efficient.
Yeah.
Too. It's an efficient way to quickly figure out what the market's thinking and doing.
Efficient, reliable, market depth. There's a lot of liquidity in the futures markets. So that's actually a really good question. Next question is from Kimmy. What do you guys think of the ESG investing? So there's this whole movement around environmental, social, and governance investing. Why don't we define what that is and then talk about you guys' opinions on, does it make sense to invest with that methodology?
Yeah. I'll let you start this one, and then I have a few thoughts that I'll add to it too.
So ESG has become very popular, and I think some of this is just marketing hype. I don't typically use ESG as like a primary guiding principle in my investing, but I do think there's some things within ESG that do make sense to focus on in some cases, like especially the G in ESG. So ESG has three big buckets, like you said: environmental, social, governance. Governance is like corporate governance, executive pay, how they treat their employees, how they treat their shareholders, shareholder rights, how things are structured at the board level. So there's a lot of things within governance that actually do matter to stock returns. For instance, I pay a lot of attention to how executive pay is structured so that I know if management is incentivized along with shareholders, if they're diluting or buying back stock, those kinds of things. So governance for me matters a lot. I tend to think things like environmental and social show up in returns no matter what. Even if a company's not necessarily putting itself into an ESG framework, I think they have to actually take care of their employees. They have to take care of, social concerns. Otherwise, they're going to see a drop in revenues and profits.
Yeah. And some examples of that, actually, of the social side where companies suffered because of their views or things that their CEO said. Abercrombie and Fitch. Abercrombie basically died after the CEO came out talking about how they don't want ugly people working in their stores and they want pretty people wearing their products. Obviously that didn't go well.
Yeah.
And that CEO got booted.
That CEO got booted, and now the new CEO is trying hard to basically turn that viewpoint around. And the other thing is we're starting to see companies, Lululemon also had the same issue. Lululemon CEO said some crap that got him in trouble too, and people don't buy the stock or they don't buy the product.
That was with the whole like see-through pants debacle?
He basically was saying large individuals should not be wearing the yoga pants because of the see-through. Yes, the see-through
Didn't that crush their stock price by like half?
It did.
And did you guys buy on that?
We did. But essentially what happens is the market works itself out. If companies and corporations are being bad, their stock price is going to sell off.
Yeah.
And the companies like American Eagle, they have a product line called Aerie that's out there really trying to promote body positivity, and they're completely taking it in a different direction. And people are loving it. And, companies, they'll basically learn eventually that they have to be careful with that. They have to be mindful of that.
So it's almost like ESG is kind of built into good companies by default. Like you said, it's maybe like a marketing ploy to say you're ESG, and you don't necessarily have to even make that explicit if you just behave in a socially and environmentally friendly way.
Or treat your employees right.
Yeah.
You know?
Yeah, I agree. I think when you look at some of the ESG ETFs, a lot of that is just hype and marketing. Some of the companies that the ESG ETFs hold are kind of actually questionable on some of those ESG metrics. So
For sure.
It's funny. That's why I don't use it as like a primary guiding principle, but I do check in on some of those, things within the ESG framework to see if, there's any risks with the company or anything that, they're doing that creates concern for me.
Yeah. So basically, you don't have to necessarily say you're only going to invest in ESG companies, because it's kind of inherent. Like, good companies will, at some level, follow that.
I think so, generally.
Cool. All right. Well, I think that's a good stopping point for today. Lots to think about. Again, we've got the Bitcoin block halving coming in just 3 days, guys. Hopefully you're excited for that. We may do some kind of live stream or party with that. Again, it's funny going back to like 2014 and 15 when I wrote the Bitcoin book and was on the speaking circuit. I was telling people, like, look, institutional money is coming to Bitcoin. And it's been flowing in slow and steady over the last few years. But I feel like with guys like Paul Tudor Jones finally throwing his hat in the ring, like
A16Z,
on the VC side and the public market side. And now you've even said, Nikki, from the CFP side, a lot of financial advisors are getting pressure from their clients. Like, why are you not recommending? Or are you just, basically indexing the S&P? Where's the value? If you don't understand crypto, you're kind of getting left in the dust at this point.
There's actually demand right now for advisors that have experience with crypto.
Mm-hmm. Awesome. So, we'll keep a close eye on these macro numbers, unemployment, earnings. A lot of earnings recently came out. Any kind of final thoughts or any examples that you think are important to kind of point out there before we wrap it up?
I'm just ready for life to go back to normal. That's all I got.
Yeah. Looking forward to it. So, all right, guys. Well, thanks for joining us today. Don't forget to subscribe to the We Talk Money show on your podcast. Go to the website, submit a question. Hopefully YouTube doesn't take us down. They've been randomly censoring a bunch of people in different markets, anything remotely controversial. So if you want to invest alongside with us, we'll link up the Skill Incubators investor wealth building community. And you guys stay safe out there, stay healthy, and we'll see you next week after the halving.
See ya.
Take care.
Later.